And gold. Yeah, it was down a buck, but hanging in there at $3,223 per ounce. $3,223. I remember when we made the forecast for golden year for gold, it was $2,041 per ounce. So you can see how things are changing so quickly. And if there was no cryptos out there, you'd see gold prices double what they are. They cut interest rates a percentage. Inflation's going to go up. And gold prices will go much higher.
In today's news recap, beyond gold, these two precious metals bull cycle is brewing. While global investors remain focused on gold, silver, and platinum are making a striking comeback. This week, spot silver prices surged past $36 per ounce, hitting a 13-year high with a year-to-date gain of 25%, while platinum climbed to $1,150 per ounce, reaching its highest level since early 2022 and posting a 25% gain, 29% increase this year. These two industrially significant precious metals are demonstrating sustained upward momentum, driven by the dual forces of the new energy revolution and supply deficits. The rally in silver extends beyond its traditional role as a safe haven asset. Nikki Shields, head of metal strategy at MKS PAMP SA, noted that breaking through $35 per ounce marks a critical inflection point for silver, and maintaining this level could attract broader retail investor participation. Industrial demand for silver is growing at an unprecedented pace. According to the Silver Institute, the global photovoltaic industry will consume nearly 196 metric tons of silver in 2025, equivalent to the total annual demand for silver in jewelry. Backed by demand from solar panels, 5G equipment, and electric vehicle conductive components, the silver market has been in a supply deficit for 3 consecutive years. Notably, silver ETF holdings have risen steadily since early February, with an 8% cumulative increase. Analysts at TD Securities point out that current prices remain 40% below silver's all-time high of $50 per ounce in 2010, suggesting that the metal's catch-up rally may only be in its early stages. Platinum's surge is more structurally driven. As a key material in catalytic converters for internal combustion engines, the automotive sector accounts for 80% of global platinum demand. With China's auto market recovering and Europe tightening emission standards, platinum lease rates have climbed, reflecting tightening supply. Reports from Geneva-based traders indicate that Chinese industrial buyers are actively rebuilding platinum inventories, pushing spot premiums higher. Now we'll show you the best clips of the latest interview. Don't forget to like, subscribe, and turn on notifications so you do not miss out our daily recaps. And check goldsilverstacks.com to get your Stacker's Handbook, the ultimate guide to stack gold and silver, packed with strategies to trade the gold-silver ratio and get more ounces and build wealth over time, so you don't have to rely on market commentators to make your investment decisions. Enjoy the episode.
Oh, the world is waiting. What's going to happen with the deal made between the United States and China on the tariffs? So the markets are holding up, waiting for something to happen there. Looks like nothing much going on, but we've got to see. And I think it's going to be a positive, just so you know. I think they're going to cut some kind of a deal. It's not a tariff deal. It's more of a deal of rare earth minerals. So that's really the deal here. And we need them, and they need more to sell more. So there's going to be a deal. Stocks climb today as investors hope for a positive resolution on trade discussion. That's the language of CNBC. The Dow is up 105 points. The S&P up 0.55. And the NASDAQ up 0.63%. And so I think the talks are going really well, really well. We're very much spending time and effort and energy. Everybody's got their head down, working closely. Lutnick told reporters, he's the Commerce Secretary, on Tuesday in London. Meanwhile, Brent crude's hanging at that 66 level per barrel. And again, should Israel and or Israel go to war against Iran, you're going to see the prices almost double. Bitcoin, we've been bullish on Bitcoin for almost a decade. And we said when the Trump team got in there and all the clowns in there that are in the crypto club, prices are going to go higher. And as we're on the air, it's almost up to that $110,000 per coin. Yep. And gold. Yeah, it was down a buck, but hanging in there at $3,223 per ounce. $3,223. I remember when we made the forecast for golden year for gold, it was $2,041 per ounce. So you can see how things are changing so quickly. And if there was no cryptos out there, you'd see gold prices double what they are. So your economic update, we're looking at what's going to go on with the tariffs. And then Trump coming out and saying that he came out against Powell again and again and again to lower interest rates. So here we have an article in here by Gregory Mannarino, Monetary Suicide. Breaking headline, Trump presses Powell for a full point interest rate cut. Cutting rates by a full point at this stage equals monetary suicide. So he goes on to say what he has to say, and we go on to say what we have to see and say. And here's the deal.
In today's news recap, silver jumps to highest level in 13 years following gold's 2025 rally. The price of silver moved sharply higher Thursday morning and hit its highest level in more than a decade. Silver futures rose as high as $36.27 per troy ounce on Thursday, notching the highest price for the metal since early 2012. Silver futures were last up more than 3% on the day at $35.81 per troy ounce. Silver has been a high-performing asset in 2025 and is now up more than 20% year to date. That is still lagging the move in gold, however, which has jumped about 28%. The price of gold was down slightly on Thursday, meaning silver's rally closed some of the gap between the two. Silver has industrial uses, including in solar panels, and is also seen by some investors as a defensive precious metal similar to gold. A recent survey from the Silver Institute estimated that the supply of silver was about 15% lower than demand in 2024 and projected another deficit in 2025. Now we'll show you the best clips of the latest interview, but first, smash the subscribe button, turn on notifications, and check our new Numismatics Handbook. Most stackers want to get active, but swapping their metals for dollars isn't an option. There's plenty of opportunities in the overlooked numismatics world. Mastering U.S. coins, key dates, and errors pays off by multiplying your ounces and capitalizing where others aren't paying attention.
They cut interest rates a percentage. Inflation's going to go up. And gold prices will go much higher. And as Mannarino writes about the death of the dollar, we've been writing about the death of the dollar, as you well know, for quite a while. It was on the magazine covers at one time. And here's the deal. The lower interest rates go, the deeper the dollar falls. The deeper the dollar falls, the higher gold prices go up because it's cheaper to buy gold when the currencies in other countries are going up. And, very important, much of the world has had enough of the United States geopolitical and socioeconomic hegemony. You're finished with it. And Trump ain't a popular guy. And we're hearing it, how tourism is slowing down in the United States. In the big cities, you're not seeing the people there that used to come in from other countries. So the whole game is changing. And so there's a whole article in your economic update that you're not going to want to miss. The jobs, again, we go over the jobs, what jobs are being created, why, what, which, but on and on and on. All the data is there. And the rate cuts that are coming and what's going on in the world. Asia's factory production declined in May. Yeah. China's is down. One after another going down. They're going to do everything they can to prop up this economy. More cheap money, higher gold prices. Simple as that. As a matter of fact, you saw over in India, they're cutting the rates by cut the rates by half a percentage point. Half-point rate cut. And office building bust. More data, more facts, seeing where it's going and what's next. And what else do we have here? A whole lot more. Big's getting bigger again. Every week, when the economy fails, jobs go with it. We're giving you the rundown of the real jobs that are being lost compared to the real ones that are being created. No comparison. And all the businesses going out of business week after week after week that are not being reported in detail as we're doing it. And then on to the Israel war. It's just getting worse and worse.
What do you think of Celente's take? Is he spot on? Do you agree with him? Post in the comments section down below your honest opinion and share with the stackers if you have an exit plan to sell your gold and silver, or if, on the contrary, you won't sell your stack no matter what. Subscribe if you have not yet done so. And check this video right here because it's a perfect fit for you. I'll see you on the other side.